Okay.
Sure. So I'm recording you now.
Thank you.
All right. Okay. So basically, where do we start from?
Well, some of the terms I know them theoretically, but I don't know the application.
Okay. Good.
So I know the stop loss, I know pips, I know trend line, I know the markets, but looking at the chart,
Okay.
I don't know. When I look at the chart, I don't know what the stop loss does. I just know
All
that
right.
it is put after. I don't even know how to enter the market.
Okay.
I read some things. You see that if it's an uptrend, you enter at the base of the peak. Just some things like that. So
Okay.
I know the terms theoretically, but
Okay.
I don't want to cram it. I want to know it.
Awesome. Awesome. Awesome.
So I just want to. If you want to, okay. Just tell me if you want to enter the markets now. You want to maybe understanding the charts. Then maybe as you begin to use the terms, I begin to tell you where I have problems
Okay.
with the
Good.
thing.
All right. All right. All right. All right. Okay. Good. Let's do it this way. Let me pick it from. I'll pick it one at a time. Are you getting it?
Okay.
Then I'll try as much as possible to cover everything because these things you're asking for actually they are the basic things and they are very very important. So
Okay.
don't gloss over them. I'll start from here. Market structure. When you understand the market structure, honestly, you might begin to have a clue to okay when to enter. If I'm entering on this trade, what should I be doing on this particular trade? Are you getting that?
Yeah.
Um, I'm sure that by the time I'm done with market structure, I will have been able to touch entry points, take profit, maybe slightly, and then stop loss also slightly.
Okay.
But of course, I'll still then go in depth on it. All
Okay.
right. For every financial market there is in the world, for every financial market, be it for cryptocurrency, be it for Forex, be it for oil, be it for whatever it is. So far, there's a chart, right, that you can see, be it for the economy of the nation. So far, you can put a chart to it. There would always be three forms of movement in that particular market. It can't be more than three. Are you getting that?
Yeah.
The first movement, excuse me, is that you have an uptrend. Are you getting it?
Okay.
I'll try and draw it to illustrate what I'm saying. You have something like this, or you have
Okay.
a downtrend. This is always the movement of the market. Are you getting? And then we're going to go on charts to be able to see.
Okay.
Are you getting it?
Yeah.
Then the third phase of the market is what? Consolidation. It will be going up and down still, but you know that okay, it's only ranging in a particular
Okay.
zone. All right, so we have it's either it's what an uptrend,
Okay.
and here downtrend, right?
Okay.
Then here we're considering consolidation. I'll explain. Now this is it. Uh, the market would not just like the price of everything. It won't go up forever. It won't come down forever.
Okay.
Are you getting it? Financial markets. Nothing goes up forever. Nothing goes down forever. So if you are
Okay.
picking a trade and then you are losing, maybe it's on a downtrend. Are you getting it?
Yeah.
What you are doing in a market that is a downtrend market is what you are selling.
Okay.
So when maybe you've seen on also on the signal group, we say sell, right?
Okay.
Or
Okay.
long, sorry, or short,
Okay.
right? Maybe you've seen
Okay.
us talk about okay, sell this market, sell from here to here. That
Okay.
means the market were predicting what? A fall in the price at that point.
Okay.
When it's a buy or long, we're what? Saying what? We're
We should
predicting
buy.
exactly. We're predicting an increase in price or the value from wherever it is at that point in time.
Okay.
All right. So in a trending market, most times it's always better for you to trade what? In a trending market.
Okay.
That is, you need to trade in this market. And I'll tell you why. You don't want to waste your time. You don't want to waste your resources. It doesn't mean you can't trade in a consolidating market, right?
Okay.
When the market is consolidating, it doesn't mean you can't trade. But you are unsure of what exactly is happening in the market. You are absolutely unsure. So it doesn't mean you still can't trade. Are you getting it? But at least for what's it called? For one to be able to understand what you're actually doing in the market, first you need to watch out for: am I in an uptrend? Am I trading a downtrend?
Okay.
All right. Let's quickly go over and then show a bit of that. Just a second. Okay. Can you see my MT4 now?
Yes, I can.
Okay. All right. So let me just. Have you been studying any pair particularly?
I think I have been studying what's the name of GP. Where's it safe?
GBP.
Uh, USDCHF.
Okay. Good. All right. All right. Okay. Let me just go on that chart that you have been looking at already, and then I want us to be able to look out for the trend. All right. Now, I didn't say this, but let me quickly say. Anytime we're in a before you can confirm that what there's a downtrend in the market. Are you getting it? Before you can go ahead to confirm there's a downtrend in the market or an uptrend in the market, you are looking out for, we call it a higher high or a higher low. Now,
Okay.
this is what higher high, like I will explain, or this is a high point, right?
Okay.
This is a high, but look at this high. This is higher than the previous high.
Okay.
So you have this is what a higher high.
Higher high.
Yeah. This is what a higher high.
Okay.
If we take this as our low, right?
Okay.
This is what a lower high.
Okay.
Though it's on the low, but it's still higher than this first low that we have.
Okay.
This is what a lower high.
Lower high.
Yeah. This confirms that what we're in what an uptrend. Once you have two, at least a minimum of two on a good time frame. Are you getting it? I'm still going to go over to the time frame. It doesn't mean you can trade on any time frame actually.
Okay.
If you are taking a trade decision based on what you are seeing on H4, your entry and exit should likely be on that particular time frame that you're studying.
Okay.
If you pick entry from a lower one, you need to continue to watch the market based on the higher time frame that you entered. Are you getting it? All of those things might seem a little bit complex, but not so complex. Let's just go one step at a time.
Okay.
All right. So when it comes to a downtrend, this is a high, right?
Okay.
But this is a higher low.
Okay.
It is lower than the previous high.
Okay.
This, on the other hand, is what? A higher low.
Okay. Hello.
Once you have two higher lows, right, it already confirms to you that what This is a
It's a
what?
downtrend.
A downtrend. And if this is a low, this is a what? A lower low.
Lower low.
And this is what? A lower low.
Okay.
I'm sure you've been hearing some of these things in some of the videos you're watching.
Exactly. Yeah, I have.
And so this is exactly what it means. So in this market, the market won't always happen as straight line as we're trying to draw it here. Are you getting it? But
Okay.
then you would always see the trend. You would always see the trend. So I'll go back to the chart now so that we can be able to spot and then be able to tell. Now, the fact that where your stop loss and all that comes in is the fact that we're in a downward trend, and then I've established earlier that what we can't continue in the downward trend forever. If we're in
Okay.
an upward trend, we can't continue in the upward trend forever also. So there will always be times whereby trends are what? Changing.
Changing.
You get it? So we need to be very, very careful. We don't judge the market. We only look at the market and then flow along with whatever the market is doing. Nobody can
Okay.
predict. That's why we use any trader who begins to tell you affirmative words like I'll do it 100%, I'm sure I'm 100%, 100%. You know that there is some level of insincerity in what the person is saying. That's the truth, because it's a probability based market. No one is 100% sure of anything. We're not sure of anything. Are you getting it? So we just need
Yeah.
to watch the market, let the market do whatever it is doing, and then we flow along.
Okay.
Yeah. Now, this is it. I'm sure you can, as you're looking at this chart now, you can already see the trend.
Yeah.
And then I'll just spot out some important trends here. Look at, we're having a downtrend here. I don't want to go
Yeah.
back to see. All right.
Okay.
We went further down, and then we had this. It's still the same because it didn't go way above it. And then we
Okay.
had this, we had this, we had this. These are lower lows. I mean lower highs that we're having here.
Lower highs.
Then the lower lows happening beneath, you can see.
Yeah.
So if I want to be a bit exact, maybe I've seen this happen 1, 2, 3. So I want to pick the next one now. Then I can begin to introduce my trend line.
Okay.
So what are you doing with your trend? You want to measure, and then it's always best to measure from the tip of the week or the particular time place where you are trying to get your information from. I
Okay.
get it. So your trend line is just like a guide for you to be able to know that, okay, now we're having a downtrend. So it shouldn't exceed, ideally. It can always happen, more like you can have weeks happening around, just comes up, come down and all. But you can see your trend line is just there to guide you so that you can actually know, okay, if it has gotten to this particular zone, you should start expecting a retracement.
Okay.
Are you getting it? And then now look at this downtrend. What do we see here? We can see a break of this trend line, of this particular trend. You can see it came down, came up to touch. At times it won't touch absolutely, but it's always fine. Just look out for the major part where most of the touches happened, and we can see we have one touch here, we have two, we have 3, 4, 5. This is already a very good place to put our trend line.
Okay.
Did you get that? It's already a very
Yeah.
good place to where you have most of the activities happening. Now look at this. At the break of this trend, this was the first high, right? We have our high point here. This was after breaking that trend. This was the first. You need to let the market exhaust itself. For someone who is trading, right?
Okay.
If I was watching this at the break of this trade, I'll have already initiated a buy. At the break of this trend line, I'll have initiated a buy. Are you getting it? But if I had missed this buy, after missing this buy, You need to allow the market to retrace. If you didn't buy from here, you didn't enter the market from this point. You need to allow for what? A retracement. And then what you're doing now is what? This is a higher high now.
Okay.
Higher than the previous high, right? And then we keep having higher highs, another higher high. The market came down, retraced and all of those things. But what? It didn't break this. Look at, let me show you this. Look at, then we started the formation of what? Another trend here. Can you see?
Okay.
We began, another trend started here to show that what? This is a low, but you have, this is a low point here. You have a higher low here.
Low.
Are you getting it? This is a higher low. This is a higher low again, higher than the previous, higher than this. This is another higher low, and then at this point, of course, you had the break, another good time to sell. But once you're selling and then you can already, let me go to show this. This is why you don't, in the market, like I said earlier, no one is 100% sure of anything. You can't say, okay, because you started a sell here and then you want to sell it back down, that there's going to be the formation of what? Another downtrend. No, you can't force the trend to happen. You only watch out for the trend. So as this trend line got broken, are you getting? As this trend line got broken, and you can see that, let me zoom in. Okay, so we have the break of the trend line. In fact, as this trend line got broken, you could have initiated a sell immediately because, of course, the market is going to respect it. And then you would have been able to at least about 68 or thereabout pips, about 60 pips, before then you watch the market. One thing I tell people is this: we are not the market makers.
Okay.
The market makers are the banks, the big boys, the big investors, and all of those things. What we are trying to do is just to make something in between. We're trying to make some pips, trying to make sure that we are making some profit while the market is doing whatever activity the market is doing. We don't control the market. All right, so for most of your trades, at least for now, you should be, irrespective of how high the market is going to go or whatever, that may not be of utmost importance to you. Once you can make your 20 pips, 30 pips, 40 pips on a single trade, man, just close the trade. Watch out for it to adjust itself. Are you getting it? Watch out for the market adjusting itself, and then you can go in again. In fact, I can recommend maybe for a start, once you make 50 pips, in fact, 50 pips is quite much. You can start with 20 pips, on a daily basis. Are you getting that? You can start with just 20 pips, maximum 50 pips on a daily basis. And then you can begin to do more, because one thing I've seen over time is that our risk appetite varies. And then our understanding based on previous experiences would always vary. There's a guy, this guy was sharing with me yesterday. He's also one of our students, very, very new to Forex. The risk this guy is taking, I'm not sure I can even try it. He started a $150 account. Are you getting it? After he demonstrated for a while, no doubt. He demonstrated for a while. And then he started a $150 account. That was 2 weeks ago. At the end of the first week, he withdrew his capital out of the market. Are you getting it? Then he raised a new 150 because he doubled his capital in 1 week, $150. Then the new capital he got, which is now his profit, he raised that to over 400 or thereabout. He withdrew, and then yesterday was telling me that just yesterday, Monday, he made around $200 from the market. How many pips does he try to catch on a daily basis? I think he said his daily target is 50 pips. which is very, very fine. So spreading it across a week, that's what 250 pips. Of course, the lot size is using might now be another question to talk about. But so I don't get ahead of myself and I don't get to lose what we're talking about. So we can see then we started more like another uptrend. You can see the high highs, right? You can see the higher highs. You can see the higher highs. You can see the higher highs. And then we got here. What do we have here? This is a consolidation point. Let me take this out and draw it again. Because we're not having, after this high, this is more like a higher high. But we can't really call it because okay, looking at it here now. Oh. Looking at this region now, look at the lows. Though it seems like this particular point seems to be higher. This point is higher than this point. But look at the base. We're not really having the lower high as it was. I mean the higher low rather. What am I saying? The bottom part is not really forming as it was forming any longer. Are you getting it? This is a range market. This is a ranging market. This is a ranging market. Consolidation is happening here. At this point, what do? You are watching out for what the market is saying. Is it consolidating to go higher or consolidating for a lower movement? You never can tell. Consolidation, when you're having an upward trend, are you getting it? When there's an upward trend and then the market begins to consolidate, you don't conclude that, okay, after the consolidation is going down. No, you can't actually conclude until the market begins to show us. However, if you are able to you can look at candlesticks to be able to start judging, because the candlesticks are actually one of the best representatives of whatever it is that is happening in the market. I need to move this. Okay. I'm trying to, let's see how we can just interpret the candles that are printing at that point. But this is one thing that is very significant. You can just use your horizontal line to mark out that consolidation zone. Are you getting it? And then once that zone gets broken, then you can now begin to think of what trade it is that you want to take. Are you getting that? And then from here now, the market began to show us in clear terms that what? Look at this point, you can see it all the way. So you can see it all the way.
Okay.
See it all the way. And it's important to begin to note that, except otherwise, we're looking out. This is looking more like what? A break of this trend. Are you getting? But we still need to allow the market to interpret itself. Now, we have this now showing clearly that we started a downward trend.
Okay.
There would always be trend. Markets consolidation won't last forever. Upward trend won't last forever. Downward trend won't last forever. And what you want to do at every point in time is to make sure that you are not trading against the major trend.
Okay.
Now, in a sell market, this is a sell. This is a sell market. I'm on 4 hours, and then each of these 4 hours, what's it called, line that I put here, this period separator represents a week, right?
Okay.
But in the course of that week, now look at this. From this point down to the lowest point it got to, over 520 pips. This is the pips. Can you see? Can you see the
Okay.
numbers? Right? You can see the numbers that came up from this cross share that I'm using.
Yeah.
209, 5142. Can you see that?
0.96993.
Exactly. So your pips are actually the first three numbers here is your pip. That's your 514. That's the number of pips it has actually moved.
Okay.
Did you get that? So it's
Yeah. What's it? That's 09. What is it? 209.
209. It's, don't consider it. It's actually nothing.
Okay.
Nothing. That's nothing to do with what we're actually doing.
Okay. It's just the one in the middle.
Yeah, just the one in the middle is where you put your focus on. That's to tell
Okay.
you the number of pips the market has moved. But now look at it. Overall, it's a downtrend, but doesn't mean that we've not had some buy opportunities. There've been some buy opportunities. You get that?
Yeah.
Can you see? There's been some, because the market won't just go down except there's a very, very strong news. Are you getting it? Because it's a room for buyers and sellers. You can see buy opportunities. So if you are trying to buy in a sell market, you are doing it for what? You are doing it temporarily.
Okay.
It must be with a very, very short time frame in mind, because the overall market structure is what? A downtrend. Is never the best for you to trade against the trend. Are you getting it? Did you get that, sir?
Yes, I got it. I got it.
All right. So now pips would be the numbers. How do I put it? More like the that's how the movement of the market is measured. Are you getting it?
Okay.
If you're trading other markets like the crypto market, you're using percentage to judge your movements.
Okay.
Here you are using pips to judge the movement. I'll recommend babypips.com. They have some very, very detailed and simple what's it called, in illustrations to help one be able to understand those things. Even myself, I first read Baby Pips a long time ago. About 3 weeks ago, I say I had to go back to the website to go read out some of their topics. They know how to break it down to a very, very simple layman's term. Are you getting it?
Okay.
So because in actual sense, all these numbers that you are having, all these numbers for every pair that you're having is actually a division of what? The USD value against the CHF value. That's what always gives all these numbers. Are you getting all these numbers? So if we're
Okay.
saying um there's been a movement, or say even this how do I put it? What you're actually doing is you are subtracting where, if you are doing a sell now, for example, if you are doing a
Okay.
sell here from where I put the trend line, that's 1.001, right? So, and
Okay.
then to this point, maybe you're selling to this point, that's 0.998530. What you are calculating is what? This, you can either minus this 1.001 from what? 0985. Did you get that? You
Okay.
neglect the rest, just the first three. So, but in this case, you can just do, if you do 1000, that's the first four now, you will remove the decimal.
Okay.
You subtract it from this, you should be able to get what the amount of pips that is therein. But on the other hand, if you are using your system or even on the phone, you can always just drag this. Instead of you trying to do the maths, this already tells you that what the movement is, what, 159 pips.
Okay.
All right. Entry point and exit point. Let me quickly talk about that. and then I'll talk about stop loss too.
Okay.
When you are saying stop loss simply means that if you are buying, maybe I want to buy this market, and then, but the market might go against me, but I don't want it to wipe out my account. So you're telling the market to ensure that you're only losing a certain amount of pips instead
Okay.
of losing your entire capital. Get this, sir. Stop loss is like you are trying to minimize your loss on every trade because it's probability. So one thing I do recommend is this. If you are entering your trades at key levels, when I say key levels, I'm talking about this zone. This is a key level. This is a key level. This is a key level. These are key levels. Are you getting it?
That's for a downward trend.
Yes. These are key levels. If you want to buy in this market, right? Are you getting me?
Okay.
In this downward trend, if you want to buy the key level, all the zones around here, these are key levels.
Okay.
Get that? So
Okay.
your trend line, you can always find key levels. These are key levels. Key levels. So if you are in this market now, you're selling or you are buying. These are key levels.
Okay. Sorry, before you move on, let me just ask, say, do you make money from, sometimes you say you buy or you sell?
Yeah.
Now when you enter, okay, do you make money by just buying, or you make money when you buy and you sell?
No.
Or how does it go?
Okay, good. Let me come over that again. I said we are trying to predict the movement of the market.
Okay.
So if you're looking at this particular market and then you decide to sell, are you with me, sir?
I'm with you.
So if you decide to sell in this market from here, maybe from here or whatever, and you sell for what? You decide to sell to this particular trend, this zone, maybe for you're making 140 pips.
Okay.
Now, your lot size, that is for every trade that you are entering, you'll have set a lot size. I think I was explaining the lot size to you earlier.
Yeah.
So if you have a lot size of 0.1, that means $1 per pip is what you are risking.
Okay.
If you have a lot size of 1.0, that's a standard lot. Anything from 1 above, they are called standard lots. If you have a
Okay.
lot size of 1.0, it means that what you are risking $10 per pip.
Okay.
Now, help me do this simple maths. You are risking $10 per pip, and then
Okay.
you made a trade, you got 103 pips. How
Okay.
much have you made in that trade?
Is it 1030?
Absolutely. Because 1.0 is what? $10 per pip. Now,
Yeah.
let's do the reverse. From here, you decided to what? To sell this market. Are you getting it? You decided
Okay.
to sell from this point, this key level, instead of what? Buying, right?
Okay.
Now, that's an error, which you shouldn't do, right?
Okay.
Or I'm just assuming that, okay, instead of you buying here, you decided to what? To sell. Now, every time it's going against you, every time the market is going against you, say for example, the market goes against you by what? 100 pips.
Okay.
The market goes against you by 100 pips. And you are trading on what? You are trading on $1 per pip. That's 0.1. How much have you lost?
That's sorry, come again. Sorry.
All right, good. You're trading 0.1.
Okay, that's $1 per pip.
That's $1 per pip.
Okay.
and the market goes against you by 100 pips, how much have you lost?
Is it $100?
$100, absolutely. But if it goes for you by $100, by 100 pips on the same lot size, how much have you gained?
$100.
$100 still, absolutely. So that's the way it is. So your pips, the number of pips you do based on your lot size. So if, for example, we both take the same trade, I take I go on the trade with 2 standard lots. That's $20 per pip, and
Okay.
then I'm doing 20 pips in profit, right?
Okay.
That's how much. That's $400, right?
$400. Yeah.
Yeah, and then another person on the same trade is going with what? 0.2, 20 pips. The guy is doing what? $40 because he's
$40.
trading $2 per pip. And if we are both losing, I'm losing 400, the guy is losing just what? 40.
40.
Yeah. So the lot size is always better that your lot size is proportionate, number one, to your risk appetite and also to the size of your account.
So what do you suggest to be like a normal lot size, the safe lot size?
There's no safe lot size, honestly, because it depends on the size of your account. There's no safe lot size. There's no. In fact, I don't like people playing safe.
Okay.
Because when you are entering at key levels 1, and then you are setting your stop loss, and then you are setting your take profit. So most times, I also encourage, if you are setting a stop loss, let your profit to risk, your risk to reward ratio, let it be like at least 1:2 or 1:3. So if you
Okay.
are losing 10 pips, it should be for a trade that is likely or probable to give you what, 30 pips.
Okay.
That makes sense, right?
Yeah, it does.
If you are losing 20 pips, let the trade have the potential to give you 60 pips.
Okay.
Are you getting it? So key
Yeah,
levels are very, 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 very important. And then if you have entered at a key level, it doesn't mean that what you won't see the market printing things against what your trade or all of that. You just need to be able to trust your decisions. Are you getting it? That's why
okay.
I'm recommending that what you start first with a demo account. And from what I saw, you're creating a demo account of $100,000. I would advise that you try and create something smaller.
I don't even know how that one created. I just saw 100,000. I
it,
don't even.
it must have been at the point where you were filling the parameters. Maybe you didn't just put attention to it. So you
Okay.
might need
Is
to.
there any way I can
You
edit
can
it?
create another one. You can just delete that one, create another
Okay.
one, because you may not be able to set that. You get.
Okay.
So you may just need to create. And then if you use I think if you use FXTM, they allow you to create demo accounts even as low as $500. I
Okay.
think the minimum odd Forex does is about $5,000 or 3,000, and it's still quite far from
Okay.
what one wants. It's always good that your demo account is quite close or the same as the amount you want to start trading with.
Okay. So
So that
this suggests I should do it with FXTM.
yeah, you can do with FXTM. But one thing I want you to do for me first is this. On this your $100,000 account, yeah?
Okay.
Have you traded at all?
I haven't.
I want you to pick some trades. I want you to pick some trade. Let your lot size be 10.0.
Okay.
Are you getting? I want you to pick some trades. Check out the market. Open as many charts as possible. Look out for key positions. Then take about 5 or all through the week. At the end of the week, I want to review those trades. Why you took them, where you put your stop loss, why you put them where you put them, and all of those things. I just want us to use that for some education also.
Okay.
Yeah, it will
Okay.
really help. So I think I've
Yeah.
talked about peeps, I've talked about lot size, I've talked about trend line. But if you check out in the academy, if you check out
Okay.
in the Binance Academy, I think we did justice to trend line. I did a topic on it. Peter did a topic on it.
Yeah.
And
Yeah.
so I think Then pips, I think we've touched pips.
So that for that the chart you just left
Showed you.
now.
All right.
Now you are trying to show me the entry points. Now you
Okay.
talked about stop loss.
Yeah.
Where do I
Put your
put
stop
it?
loss. Okay. Awesome. Very
Yeah.
important question. Very important question. All right. This is it. If you are entering this trade, maybe this particular trade, this is still running. This is a live trade running. If I, as a
Okay.
person, enter this trade here, are you getting it? With the intention that what the market should sell based on the trend line that I'm following. Are you getting it? I'll put my
Okay.
stop loss here above this line. Are you getting it?
Okay.
I'll put my stop loss above this line. Why? That's how many pips. Let me see. Quite much. So this, I may not take this trade because the stop loss will be too much. This is about 90, 94 pips stop loss for a potential profit of what? Say about 200, 237. It's quite, might be worth it, but very likely I won't take a trade like this because I go on
Yeah.
every lot size. So if I'm taking 2.0 lot size on $96 or thereabout, I'm on 90 pips loss. It doesn't justify my trading strategy.
Okay. Exactly.
Are you getting it? For me, it's not going to cut it because this is just too much.
So
But
what determines where you put your stop loss? What is it? Just you just put it anywhere above
no,
where you bought?
you put your stop loss behind a resistance point or above what's it called? Behind a support. Excuse me. Let me
Behind
do this again. Behind a support zone or behind a resistance point.
behind a support
Yeah.
or behind the resistance.
Yes. Now, this trade, if I want to, this is it. If I want to buy this trend, I want to buy in this particular trend. My stop loss, if I'm buying here at this key zone, my stop
Okay.
loss here won't be much at all. My stop loss will be somewhere here. Just behind the trend. Behind the trend is where I'm going to put the trend, where I'm going to put the stop loss. I get it. That's about how many pips? I hope you get me, sir.
Okay.
If I'm picking this trade on the trend, if I'm picking this trade on this trend, I won't
Okay.
put my stop loss. My stop loss is just going to be about 15 pips or thereabout.
Okay.
Yeah. This is where I'm going to put my stop. So it's going to take me out.
Okay. So that means that the place you try to put the stop loss, is it that you put the figure?
Yes, you put the figure on the left on your MT4. Stop loss
Okay.
is on the left. Then I think there's a video that
Take
also
profit.
talks about that. Take profit is on
Yes. 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 On the right.
yeah,
Yeah.
on the right. Then your lot size, you can always adjust that somewhere at the top.
Okay.
Yeah.
Okay.
You can always adjust your lot size. If you can check your app right now, just try and do as if you want to open a particular trade. You will see at the bottom, you see sell, buy, right?
Okay. Yes.
Sell will be
Yeah.
red, buy will be blue. At the
Blue.
top, you
Yeah.
see either market execution.
Yeah.
You can click on that market execution. It will show you buy stop, buy limit, sell stop, sell limit. We can
Okay.
talk about those ones later. Pending orders, we'll talk about those ones later.
Okay.
And beneath that, I'm sure you will see 0.0 something. That's where you put your lot size. You can always adjust that also. Then
Okay.
immediately after that, I think you should see the price in which the market is at the moment. Then before you now see where you can input data on the left or on the right. Can you
Okay.
see that? On the left is where
Okay.
you put your stop loss. On the right is where
Yes.
you put your
Take
take.
profit.
Yes.
Yeah.
But you can always adjust it even after taking a trade. Are you getting it?
Okay.
So you can always adjust it. Because for example, if you are taking this trade, you are selling from this point, this would have been a very good place for you to put your stop. If you are entering at this key level, in fact, if you are entering here, your stop loss shouldn't be. If you want to be very, very realistic with yourself, your stop loss should have been hit already, because at least about 15, 20 pips from this point. But I'm not sure I want to take this kind of trade. If you're entering here, you put your stop maybe just behind the trend. You might just give it an allowance because the market can breathe. Weeks can happen. All of those things can happen, but the body of the candle may still not close above the trend line.
Okay.
Are you getting that? So that said, I was about saying something. So okay, for example, you are selling this trend. You are selling this particular trend. Okay? And you had put your stop loss here at the beginning of the trade. Because, like I said, you are not the master of the market. The market is the oga of all of us. Are you getting? So you are selling.
Okay.
As you are selling, you need to be adjusting your stop loss. Are you getting it?
Okay.
As the market got to this point, maybe the market is now here. You need to put your stop loss in profit. So that even if the market wants to reverse, you are not leaving empty-handed.
Okay.
Are you getting it? As the market broke this zone again, look at as it's breaking important zones. This for me is another important zone. This particular point. As it passes through this zone again, I put my stop loss just a little bit above the zone.
Okay.
As it passes this zone again, I put my stop loss just a little bit above that zone because the market can still play back to the zone, but it has broken the zone and you are in profit. As it passes this major zone again, I adjust and then maybe we're somewhere here already. I adjust my stop, put it there. You get that's if you want to milk the trade to the very, very end. You need to keep adjusting stop at every point in time. Are you getting it? Once you're in profit, in fact, once you're in profit of about 20 pips, 30 pips, the first thing to do is at worst case, bring your your stop loss, bring it to where you entered the trade. So that you're now playing safe. It's now a zero risk trade.
Okay.
Are you getting it? That's how to stay profitable.
Okay.
That's how to stay profitable. Once you've taken a trade, you need to adjust your stop. That's after it has moved about 20, 30 pips. Once a trade has moved against you also in 30 pips or thereabout, you should know that it's an invalid trade. Most times it's an invalid trade, except maybe you are trading on the daily or the weekly levels.
Okay.
Which there's nothing you are looking for here. Trying to trade on the daily chart.
Okay.
Of course, you do your analysis and all that down from these zones. They are important. You need to know them. You need to know these zones. But for you to trade, I recommend H4 downwards. H4 downwards. H4 downwards. H4 downwards.
So you recommend H4?
Yes, it means that when you're on H4, I don't know if you watched the candlestick class. Yeah. Each of these candlesticks represents what? 4 hours.
Okay.
If you're on D1, each of these candlesticks represent what? 1 day.
1 day.
Yeah, if you're on W1, each of these candlesticks you are seeing represent 1 week.
1 week.
Yeah, each of the candlesticks represent 1 month.
Okay.
Are you getting it? Yeah, each of the candlesticks represent 1 minute. Yeah, each of them 5 minutes, each 15 minutes, each 30 minutes.
Okay.
Okay, so yeah, I think how many minutes gone so far?
Let me see. I don't even know how to check the time.
Wow,
okay,
it's an hour already.
Really? Oh,
very
sorry.
Close, very close to. But which is fine. Do you still have any other question?
Okay, let me just see whether I can recap. You just told me where to put my stop loss, where to enter the market.
Yes.
Now you did not tell me where to exit if I want to exit. I can exit anywhere.
No. Now, ideally, like I said, you put your stop loss behind what? Resistance point
Okay.
Getting it? Behind. Oh, I don't know if you've watched support and resistance video.
I think I have. I have.
You have, okay. So if this is a support zone, this is a support zone. Are you getting? As this is a support zone now, your stop loss
Okay.
what? But if you are picking trades around here, your stop loss will be what? Behind this zone. Are you getting?
Okay.
Behind this
Okay.
zone. This is a resistance point now. This is a resistance point also. You know, all these places. You are putting your stop loss behind this resistance. If you are working with this particular, if this is the resistance line you are working with, are you getting?
Okay.
You are putting your stop loss. If you are selling, you are putting your stop loss behind.
Okay.
If you are buying here, you are putting your stop loss what? Behind the support.
Okay.
If you are taking profit, you are taking profit before the line. Are you getting it? Take profit
No, I just got
before.
confused.
No, don't be confused, sir. Let me take it again.
Okay.
Stop loss. Let me label it. I wanted to do rush before. I ought to be somewhere at 11. I'd forgotten.
Oh, sorry.
Yeah. So stop loss behind support
Okay.
and resistance zones, right?
Okay.
So if you are buying, you should be buying. This is an uptrend, you should be buying in this trend, right? And then this is the
Yeah.
trend. This is the trend. This is the line whereby these are the key zones right here. The point in which it is touching severally. Are you getting? I don't want to
Okay.
bring out the line right now. So your
Okay.
stop loss, if you are picking a buy here, if you are picking a buy, your stop loss should always be behind the line. Behind the
Okay.
line.
Okay.
Are you getting it? That's where you put your stop loss, SL.
Okay.
And then if you are selling, are you getting it? If you are selling,
Okay.
in this market, your stop loss would always, because this is, you can see the trend. See the trend.
Okay.
So your stop loss would always, your stop loss would be what? Around these zones. This is where you put your stop loss. Are you getting it? So
Okay.
what do
Okay.
you do then? You just look out for, in fact, because once your trade gets invalidated, you will know. Except you don't want to be sincere with yourself. Once you see that, okay, this thing, break trend, those trend don't scatter.
Okay.
You get it. Excuse me. All right. So
Sorry.
now for the profit. You make sure you take profit before it gets to what? The zone. Because you are not the custodian. You are not the one making the market.
Okay.
At times, if you can look at all these places now, it didn't come to touch the trend.
Okay.
Are you getting that? So you don't want it to reverse on you.
Okay.
You always want to go on with your profit. That's the first thing. That's the most important thing. Are you getting it?
Okay.
So you are taking, if you are selling this market, maybe you are selling from this zone, you're selling from here now. You want to take profit at least before you start getting to troubled zones. If you are buying, you want to put your take profit at least somewhere here. Take profit.
Okay. Okay.
So your take profit will be before the resistance and then before the support.
So is it like when you want to take profit, you just put the number you want to where you want to stop, and then you take profit.
Yes, this is how I do it. Just use this cross chair. So now, can you see?
Okay.
So this is the number you are going to put, 0.99704 in your take profit.
Okay.
Are you getting that?
Okay.
That's the number you
Okay.
put in your take profit, 0.99704. On the
Okay.
other hand, if you were what's it called? Your stop loss would be somewhere here,
Okay.
just immediately behind the support line,
Okay.
0.99063.
Okay.
Are you getting that?
Okay. 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 I think I can work with this.
Okay.
I can work with this. So I should this how do I download this MetaTrader system? Do I do it from Google?
No, just go to your what's it called? Go to your back office, either for FXTM or Forex, any of them. And
Okay.
you will see where to download it there.
Okay, from that's on my system. I'll be
Yes,
from
yes.
okay, okay. Because I tried downloading it from Google. I think it was what downloaded was MetaTrader 5. I couldn't see
MT5.
that.
Just
Uh,
go log into your what's it called? Log into your back office for either out Forex for me now, and then it's always the same. So even if I'm not using out Forex presently, it doesn't mean I can't have their MT4. I can't use it. You can use whatever.
okay, okay.
And then
So
you can just download a plain MT4. Even it's still going to be the same thing.
okay, so I do the demo something with the live account, with the
No.
live trade, live sorry, with the current markets.
Yes. This week at least, spot out some
Okay,
trades. Let me see. You can write down your justification, so that you don't get to forget. For any trade you
okay,
are picking, don't be scared to be wrong. Are you getting it?
okay,
Don't be scared to be wrong. Don't be scared to be wrong. Just enjoy the flow. You can go on any time frame because on 30 minutes right now, see, I'm spotting trends right here. It's me.
okay,
I'm spotting trends. This is 30 minutes, no doubt. But you can see trends. If you go on a higher time frame, you may not see the same trend. So let me go on H4. Let's see. See, okay, it's
okay,
still there, but it would have happened faster on 30 minutes, compared to what's it called, your H4. So that's the point. Just try as much as possible. But for every trade you are picking, make sure you are entering at a key level. Don't be in a rush. It
okay,
may not be perfect, but make sure you're entering at key levels. And then once you enter at key levels, do your sell, do your buys, and then let me know. Let me know.
okay, okay. Thank you very, very much. I'm
Yeah, it's
grateful.
a pleasure always. Yeah. Thank you.
So hopefully by Saturday I will just send you the stuff.
Okay.
Then
Okay.
maybe Saturday, Sunday. I'll just send you. Then maybe by the weekday next week, then maybe I'll just chat you up.
All right. Yeah. Cheers. Bye. Let me go and
Yes.
forget this more.
Okay. Thank you. Thank you very much. I'm grateful.
Yeah.